Here's how to save potentially thousands in tax with one simple switch to superannuation. I want to talk about how you can maximize your retirement savings and unlock tax-free earnings and income. To start with, we just got to give a general advice disclaimer. So this video is general in nature and it doesn't take into account your personal circumstances, financial situation or needs. If you need any personal advice, we can deliver that in the form of a financial plan. And please feel free to have a chat with us. We can help you out there. Now I have a question for you. Are you nearing retirement or are you already retired? If so, you need to know about this structure within superannuation that allows you to earn everything tax-free, inshallah. Now to start with, we need to understand the different modes within superannuation. So there's accumulation mode and then there's pension mode, okay? Now, the focus for this video is going to be pension mode. This is where the tax savings are, but it's important to understand both of these structures. So the first is accumulation. That's what we are in during our working life, and that's where we're contributing money into the super to accumulate it, as the name suggests. Now, what I want you to focus on is the tax on earnings. As you can see, we have 15% tax on investment income that is earned within accumulation, and then the capital gains are taxed between 10 to 15%, depending on how long you hold the investments. Pension mode, on the other hand, as you can see, it is totally tax-free on investment income and earnings. Now, there are some considerations as well, obviously. With accumulation, you can't draw from it until you meet the condition of release. As with pension modes, once you hit over age 60 and you go into pension mode, it then becomes tax-free, which is fantastic. There's no maximum. You can withdraw the whole amount from super if you really wanted to at that point. Not that I recommend it, but you can if you need to. And you will need to draw a minimum each year, which I'll discuss a little bit further in this video. Also, as far as contributions go, when you're in accumulation mode, you're putting money into super, whereas when you're in pension mode, you can't actually put the money into the pension account. Instead, it's going to have to go into an accumulation account and then funnel into the pension. We can talk about that in another day, inshallah. In this example scenario, I just want to run through what the tax savings can potentially look like, okay? So let's say we have a 60-year-old client, they're retired, they have about $1 million in superannuation, and assuming they're earning about 7% per annum, okay? Now, if we break down what the tax savings may look like here, on the accumulation mode scenario, on 7% on $1 million, that's $70,000 a year in investment earnings. If we're taxing that at 15%, that's $10,500 in tax that's potentially payable when it's in accumulation mode. If we switch it to pension mode, if you notice here, the tax rate, it's 0%. So the total tax liability, it's $0. By going into pension mode, we have saved over 10.5 grand in tax, which is incredible. Now, key lessons from this, the obvious one, account-based pensions are tax-free investment earnings and income. You can withdraw the money from your pension tax-free as well. The other thing too is because there's those minimum pension requirements where you need to actually withdraw from the account-based pension a minimum every year, and it progressively gets higher the older that you get. If you don't actually need that money that you're withdrawing from your account-based pension, there's potential to recontribute it. It can't go straight into the pension. It's got to go into an accumulation account and then we can sort of refresh everything and commence it again. Something that an advisor can help you with, but essentially what that means is your money isn't dropping and you can get it all back into super if you need to potentially. And you can also claim a tax deduction as well in the process if it's going to be beneficial for you to save even more tax as well. So there's a lot of strategies you can do when you hit this age. So that bottom point there, definitely speak to an advisor. They can really help you out there, inshallah. And that's where we come into play. You know, we definitely give solid retirement planning advice to our clients. I've actually come across a few clients where they've met the condition of release. They're old enough to start a pension, but they're still in accumulation mode and they're paying tax where they don't need to as well. So I did want to do this video just to highlight that there is these options out there. But definitely speak to an advisor, whether it's myself or someone else. But obviously we do specialize in retirement planning and specifically in Sharia compliant, halal, retirement planning advice. So that way you're living your dream retirement without compromising on your faith and values. So feel free to reach out to us. Thanks guys. Assalamu alaikum.